Hey guys, welcome back. So today we're going to further our discussion on forbearance because I keep getting viewers reaching out saying that they're receiving different terms than other people they've seen online and just different things with their forbearance plan that's being offered by their particular lender than what someone else is being offered. And so I did a little bit of research this weekend and found something really interesting that I want to share with you guys today. But before we get into that, I'm Jeb Smith. I'm a real estate broker here in Southern California, and I want to thank you for taking the time to watch. If you're new to my channel, it's all about real estate, mortgage, trending topics like forbearance, and all of the things that are happening right now with the current epidemic. So if that stuff is interesting to you at all, or you want more information on it, do me a favor, hit the subscribe button below here in the corner. And if you like the video, you like the content, hit that thumbs up. It lets more people see it, and ultimately my goal is to help educate buyers and sellers out there, get information in front of you so that you can make informed decisions. So I did a little bit of research this weekend on forbearance just to kind of further my knowledge on it, and one thing came up that I thought was really interesting, and that's a script from Fannie Mae. So as you guys know, Fannie Mae is part of this forbearance plan. So if you have a loan that's owned by Fannie Mae, Freddie Mac, USDA, Ginnie Mae, essentially your loan is covered under this forbearance plan and what is being offered as part of the CARES Act. And if you're not familiar with the CARES Act, I'll link to a video here above where I explain more about the CARES Act and that original forbearance plan. But to get in a little bit deeper detail without going over that whole thing again, is that when you pay your mortgage to a servicer every month, that servicer then turns around and pays the bondholder the interest, whatever's earned on that mortgage to them. Whether or not you're paying, that servicer, that lender still has to turn around and pay the bondholder. And so what Fannie Mae did about a week ago is they came out and said, hey, look, after 4 payments have been missed on the mortgage through the forbearance plan, you, the servicer, the person you make your mortgage to, no longer has to turn around and continue paying that bondholder on the loan. So which means that after 4 months, essentially Fannie Mae will start buying, Fannie Mac will start buying those loans back under that forbearance plan. But the really interesting part here is because when you call and you talk to your lender, lenders have been offered, borrowers have been offered like a 3-month plan. All payments are due in the 4th month, or some have been offered 6 months, some have been offered a year with the ability to pay it back at the end of the loan. Some have structured up a payment plan, all of these different things. Well, in my research this weekend, I actually found a script from Fannie Mae that has been provided to these servicers to use in actually talking to borrowers. And so that's what I'm going to dive into today. We're actually going to look at the actual script, the language directly from Fannie Mae, from their website, where they discuss, what to talk to borrowers about on the phone. And one of the things that I found really interesting, and now I'm not reading this verbatim, but I will in the script that I do a moment ago, is that they tell you in that script that you're not going to have to pay all of that lump sum back at one time, unless you're able to do so. So they tell it in that script, hey, look, which is that script that they more or less should be using when they talk to you, that you don't have to pay this back all at one time. Another thing that I find really interesting in this script is when they talk about the forbearance plan, the ability to extend that loan out a certain number of months, they leave the months blank, which is really interesting because, in the CARES Act, it says to give up to a year, right? Which I guess up to means that you don't have to do a specified amount, but they're basically giving each servicer, each lender, the ability to make up their own terms. That's a little bit crazy to me because, if I call my lender and he gives me 3 months and you call your lender and he gives you 6 months, that doesn't seem fair. But at the end of the day, it doesn't look like anybody's enforcing it. So these lenders are able to do whatever they want to do, without really anyone coming back and making them do otherwise, which is part of the problem with this whole process. But I'm going to get into that script. I'm going to read you directly from the website, and then we'll talk about it a little bit. All right. So in this, as we mentioned in the video, this is the language directly from Fannie Mae, which you can see here at the link above. But what it says to start this is kind of a script, if you will. It gives you step 1.
basically says to go through these steps to see if somebody has experienced a hardship, and then it tells you to proceed with the script below, right? So as you go in here, and it talks about following this script if a borrower has a financial hardship related directly or indirectly to COVID, how to proceed. But more or less, the things that I'm talking about in the video that are super interesting to me is this language that you get to here. So it says that, forbearance does not mean your payments are forgiven, but you are still required to eventually fully repay your forbearance. But you won't have to repay it all at once unless you are able to do so. That is a big statement. So that basically means if you're one of those people that has the 3-month forbearance that they said you have to pay it all back in 4 months, Fannie Mae is stating right here in this script that's being provided to these servicers that they should be using that you don't have to do that unless you're able to. Here's the statement that I also mentioned in there that says, after this initial payment break of X months, we'll reevaluate your situation and see if you're still financially impacted by COVID-19, blah, 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 extend your forbearance period. So after this initial payment break of X months, so they're not telling each servicer to provide 6 months or a year or 3 months or whatever. They're leaving it up to the servicer to provide their own number of months. But what's really interesting is it says they'll reevaluate your situation, which is what these people are saying. So that's a good thing. Goes on to say, if your financial situation changes, we can adjust the length of your forbearance at any time during the forbearance period. You should contact us about any change in circumstances so that your forbearance period is not unnecessarily prolonged. So it's saying, hey, look, at any time we can extend the length or change the length, but they don't want you to continue extending it if you don't have to. And that's something that you should keep in mind, right? If you don't need the forbearance, don't keep extending it, right? Because the longer you do, the longer you're going to be in forbearance. We've talked about it hurting your credit. If that is the case, if it does hurt your credit, your credit is going to stay impacted longer. It goes on to say that it's really important to understand the amount of the payment that is reduced or suspended still needs to be repaid, but not until after the forbearance period ends. I will also remind you that if you pay your taxes, insurance, or HO fee separately, then you still must continue paying those. So keep that in mind too if you're in forbearance. Let's see here. If you are unable to afford it, you can reinstate, which means paying the total amount due, or we can set up a repayment plan, allowing you to catch up gradually while you are paying your regular monthly payment. So that's something they'll set up, is a repayment plan, so you don't have to pay it all at once, like I mentioned above. And if you can't afford the additional amount, but you can resume making your normal monthly payment, we can leverage alternative ways of paying it back, paying back the suspended amount payments in a manner that is affordable. If you have a sustained reduction in income resulting from the crisis, then we can look at a modification. So basically a loan modification. So know that if you're in this situation, they are going to work with you. Your lender is going to work with you. So regardless of what your forbearance plan is, make sure you're staying in touch with them, staying up to date so that if you do need an adjustment, they can work with you. And then at the end, it basically says they'll reach out to you within 30 days to talk about a repayment plan, a loan modification, or an extension forbearance period if needed. So that's the language directly from them. I hope that's helpful.
So there you see it. So we read the script. Now you have a little more information about exactly what these lenders, these servicers should be offering you or should be talking to you on the phone. So it sounds like, based on what I read, you have options. If you're not able to make lump sum payment at the end of your forbearance, they should either restructure your loan by doing some sort of modification. They should give you some sort of repayment plan. There should be options. It shouldn't be just one option that you're being offered. And it sounds like if you've been offered 3 months and you get to the end of the 3 months and you need additional time, they've been, the script basically says that, hey, look, if you're still having issues, call us back and we'll give you more time. So it sounds like, based on the scripts that are out there and what lenders should be using, they're not really going into deep detail about this, and we've talked about why in other videos, so I'm not going to mention that here. But more or less, you should know that, first off, if you don't need forbearance, don't apply for it. right? It's not, it says it right there. You're going to have to repay the amount that you missed. So it's going to have to be repaid back at some time. So it's not going away, but it's also, there's a potential to hurt your credit, which even though it's not supposed to, people are reporting that it has, which I'll link to above here. But anyway, it sounds like if you need forbearance and you get to the end of your forbearance term, they will modify, they will offer a payment plan, they will work with you in order to help you out. So, if you're one of those people that have been worried, you've accepted something, you're wondering what's going to happen at the end of 3 months or 6 months or whatever, know that, based on this language, there should be additional options for you at that time. So I hope that video is helpful. As always, I'm asking you, if you have additional questions, comment below. I'll do my best to answer them, to find that information from you. But again, this was directly from the Fannie Mae website, the script that was provided to servicers that service their loans. So I appreciate you taking the time to watch. I look forward to seeing you soon. Have a great day. Bye-bye.